to the materials sector at large to tell us more is Peter O'Connor from Shaw & Partners, and he joins us now live. Peter, great to have you on this afternoon. What's floating your boat at the moment? I understand that the Diggers and Dealers Conference has been on. What are the standouts for you?
It's been a busy week. There's been 49 companies presenting over the last 3 days, so a lot of information out there to digest, and coming on the back of quarterly reporting season where those same companies reported all their details for the last quarter. There's an enormous amount of both presentations and also text out there. But standouts to me, not looking at the hype, which was clearly the narrative of EV, battery, Tesla, future-facing, clean, green, decarbonisation. That's kind of the story, and that was the narrative of the conference. But looking at what's cheap and what will be the next thing to go, and I just heard you talking about gold, and gold's clearly probably the best proposition out of Diggers and Dealers. Why? Because nobody was talking about gold equities being cheap, and they are, and gold price looks cheap relative to where it should be trading, and a sector which is offering growth that they don't always offer in terms of compound growth of future production, which is around about 5% for the major gold producers. It's a good story happening in the gold space, which was not ignored at the Diggers and Dealers, but didn't get the showcasing that it typically would have got, given that's really a gold event. So limelight taken by those future-facing clean commodities, or supposedly those. But gold's the cheapest outcome, and for me, the left field presentation that really stood out because it was so different and so provocative was a little company called Venturex, VRX, now chaired by a Bill Beaumont, ex-Northern Star, a gold company in that group I've just talked about, and taking on his next endeavour, which is taking a company and turning into a mini Min Resources, but in this time the underground mining space as opposed to the open cut crushing and iron ore space. So a completely left field, different, but probably the standout because it was so different. So some very different takeaways. And then I guess lastly, nickel, just what's happening in the nickel space. Yes, that's part of that narrative of green, but it's probably the less talked about part of that, and big moves in the last week or two with BHP and the Fortescue, part of the Fortescue Group looking to invest in a Canadian nickel company, and just BHP's moves in WA, talking a lot about more growth in nickel. There's a big story there about all the juniors that feed into BHP's plant in WA. So be it nickel, be it gold, the future-facing commodities, which got a lot of the limelight, or just a left-field opportunity like Venturex, a lot of stories that played out. And the next year ahead, to me, it's gold, nickel, that are going to be the standouts for the next Diggers and Dealers.
So many stories. Peter, let's drill down into that EV thematic. It's definitely in vogue. Some of the materials that are in focus in that space, what were the companies that really stood out for you?
The standout, because they won the dealer award at Diggers and Dealers, was Independence Group, mostly because of their transaction that they announced in December last year and completed on July 1 this year, which is a tie-up with the Chinese company called Tianqi, and that's a 50% JV with Tianqi over both a mine in WA and also a processing plant to produce a product called lithium hydroxide. So that was the standout for the Diggers and Dealers conference, and probably the best of a group of stocks out there. But lithium in general, Pilbara presented a very a clear view of why the market today is cheap in terms of the lithium space, and the commodity has got more upside from here, despite the fact it's more than doubled from the third quarter of last year. So standouts through the lithium space, Independence, which bridges both lithium and also nickel now with that deal that they given the award for. But so I'd say Pilbara, Independence Group were the standouts for me in terms of that narrative. But a lot of use of the words green, battery, EV, Tesla, etc. during the presentation. So you've got to dig a little bit deeper than the surface to find out who's actually doing what they're saying, and those two companies certainly are deep into that space, and their share prices are reflecting that benefit of a tailwind plus their bottom-up work as well.
Yes, so given the focus then on those buzzwords of ESG and green, what about the traditional players, those coal players? Anything that stood out for you there?
Look, what I like about that group is not so much the story, but the fact they're prepared to defend themselves and argue a case which is pretty difficult in the current environment. But mount a case about power station build across Southeast Asia, why demand for coal is definitely declining, but at a slower rate than most people think. So they're actually having to present a case and argue it, whereas anybody that uses the word green or EV can basically put those words out there in a presentation and do nothing else. So what's in the coal space, it's interesting on the back of that, they're all enjoying the benefit of the tailwind, whether it's Whitehaven coal in the thermal coal space or Coronado coal in the met coal space, and even at the bigger end, BHP as well. But The tailwinds are still with those pure miners. So I'd say Coronado's the pick, given metallurgical coal price still looks like it's got more upside from here, given the arbitrage between the US price into China and the Australian price into China, which is a gap now of about $100 per tonne, or about 30%. So they would appear to have the most upside relative. But Whitehaven today is sitting in a pretty comfortable spot, all things being equal, and given correlations to its share price in the past, when prices for coal were near these levels, it should be trading about double, if not triple, what it's trading at today. So the EV thematic may be holding those names back, but they're certainly looking cheap relative to all their peers. So Whitehaven on the thermal coal side and Coronado on the met coal side would be the standouts.
Peter, just quickly, we're running out of time. Before you go, let's chat to the copper space. Those Chilean operations also in focus with both BHP and Rio. Any thoughts?
Yeah, so we're coming to the head now. This week's critical with that major mine Escondida looking like their union will go on strike. They have given the mandate to their union to go on strike. They're currently in consultation phase this week. If that does go to the strike phase, we could see another long strike. Last time this happened, the last labour agreement 3 years ago, it was a 44-day strike. That's a big deal for the copper market. Chile is about 30% of the world's mine supply. Escondida is about 20% of that. So if they do go on strike, it's a major potential inflection point in the copper price, which has been drifting lower over the last couple of weeks or months, despite the fact some of its peers, nickel and aluminium, have been doing quite the opposite. So watch this space. Copper names may get a bit on the back of that, which they've been lagging a little bit of late. So the likes of Sandfire, Oz Minerals, and some of the smaller names as well could do well on the back of that over the next week.
Peter, it sounds like you've had a very busy week, so thanks for making time for us this afternoon. Great to chat.
Thank you very much. Pleasure to be here. Thank you.